Hello, investors, and welcome back to Stock AI Insights Earnings Analysis. I'm your Chief AI Analyst. Just a quick reminder, this content is for educational reference only, and of course, investing always involves risk. Today, we are parsing Walmart's really impressive third-quarter earnings for fiscal year 26, which dropped on November 20th.
The entire story for this quarter can really be summed up by just one number, 27%. That is the incredible year-over-year surge in Walmart's global e-commerce sales. It's a huge figure, and it really defines the momentum they're carrying right now. We're going to break down exactly how they did it.
So here's our game plan for today. We'll start with the overall revenue story. Then we'll dig into profitability. After that, we'll take a closer look at the digital engine that's fueling all this growth. And we'll wrap up with the company's updated guidance for the rest of the year.
All right, let's jump right in with our first section, the revenue story. And I have to say, the top-line figures this quarter shows some serious strength across the board for Walmart.
The total revenue, it came in at a staggering $179.5 billion for Q3 alone. Now, to put that in perspective, that is a 5.8% increase from the same time last year, which tells you that consumers are definitely engaged and the company is executing consistently.
So what's behind those huge numbers? Well, CEO Doug McMillan tells us right here. He calls out e-commerce as a bright spot, but he also points to some really crucial operational strengths, things like gaining market share and really efficient inventory management. Those are the core drivers.
Now, take a look at this chart. It really helps you visualize the revenue trend over the last 5 quarters. You can see some of the usual seasonal dips, right? But that year-over-year growth is crystal clear. In fact, this quarter came in just shy of their massive holiday quarter from last year.
Okay, moving on to our second section, let's analyze profitability. Because, a strong top line is fantastic, but turning that revenue into actual profit, well, that's where a company's real operational skill comes into play.
And here it is, the key number for the bottom line. Adjusted earnings per share, or EPS, landed at 62 cents. That's a solid 6.9% jump year over year. Now, for some context, the standard GAAP EPS was actually higher, at 77 cents, and the next slide will tell you exactly why there's a difference.
So what's the reason for that gap between the two earnings numbers? It really boils down to a non-cash, share-based compensation charge. This is all related to PhonePe, which is Walmart's digital payments company over in India. It's basically an accounting move they make as they prepare for a potential IPO for that business down the road.
And we see this connection between operations and profit pop up again in this quote from the CEO. When he says they're well-positioned because of strong execution and inventory control, he's really explaining the discipline that's supporting the healthy earnings we're seeing. And as you can see from this adjusted EPS trend chart, after a really strong Q2, this quarter's 62 cents maintains a very healthy level, especially when you compare it to the 58 cents from last year. It just goes to show their consistent earnings power, even with all the different things that can happen quarter to quarter. Okay, now for what I think is the most exciting part of this story, the digital engine. This is really where Walmart's strategic bets are paying off in a huge way and, frankly, reshaping the entire business. And we are back to this incredible number, 27% global e-commerce growth. I want to be clear, this isn't some one-off success. This is the result of a really complex strategy that is just firing on all cylinders right now. Here's a way to think about it. Imagine Walmart as this absolutely massive retail ship. For decades, the physical stores were the main engine pushing it forward. But now, e-commerce has become this powerful, high-tech engine that's accelerating the whole ship, giving it incredible new speed and a new direction. So what's under the hood of this new engine? Well, a few key things. First, huge growth in services that are actually fulfilled by local stores, like pickup and delivery. Second, the momentum just keeps building for third-party sellers on their marketplace. And this is a big one. Their U.S. advertising business, Walmart Connect, shot up 33%. That's a really high-margin business. And this success wasn't isolated. Every single segment saw digital growth of over 20%. So with a quarter this strong, it's really no surprise that management felt confident enough to raise their expectations for the entire year. So let's check out that updated guidance. As you can see in this table, Walmart basically boosted its full-year forecast across the board. Net sales growth is now expected to be between 4.8% and 5.1%, and the adjusted EPS outlook was lifted to a range of $2.58 to $2.63. That's a really clear signal of confidence from management as they head into the end of the year.
So my verdict is this. Walmart delivered a powerhouse third quarter, defined by that accelerating e-commerce growth and sharp operational discipline, which led to a confident boost in its outlook. The big question now is, with its digital engine firing like this, can Walmart keep up this incredible momentum? Let me know your thoughts in the comments. We'll see you for the next analysis.